Hey guys, Sam here. We're mid-morning here on October 16th. Got a couple of things to show you here. So some interesting movement over the weekend, as most of you are probably aware. So I'm going to try and split this here. I'm going to try and cover Bitcoin, Ethereum, and Litecoin in this video. I've got some other things I'd like to show you in some of the alts. So it may end up being two videos, as I like to keep these, around 15 minutes if I can. So let's get started here with Bitcoin. So this is the reference chart that I've been using over the last couple of weeks. This is our 8-hour Bitcoin to the dollar on Bitstamp. And so some of this I created for you on Saturday's video. If you haven't seen that, it might be worthwhile to go back and take a look at it. You can see here, just for quickly to recap here, I'm just pulling from the major swings here, from our absolute low of this impulsive structure, from this low to our high, down to our negative 618. Here's our negative 23. We can see from the 2 to the 4 what happened the last time we hit the negative 23. That was our top to the tick. And we've got the negative 618 of that same pull from 2 to 4, and we're running into that up here. Now, I know there's a lot on this chart, so I'm going to pull. This is our shift pitchfork, which has contained this so beautifully. I'm going to pull this off just to declutter the chart. So you can see here now. Remember, you can always see where these pulls start by just looking at the edge, right? So this negative 618 is from the 2 to the 4 here that tagged the 5 high here to the tick. That was the negative 23. Well, we're now up at the negative 618 of that pull, right? So that's not to be discounted. That's the extreme off of that move, but we have some other very significant pivots to consider, and that's from our low here for the start of this impulsive structure. From this low here, you can see it on the edge here, the negative 23. From that low to our high, down to our negative 618, but that little pocket between the 618 and the 65, and now we've gone right up to the negative 23 on this move. So it shouldn't be a surprise that we're running into some resistance here. Now we can add a little bit more to this, knowing that the 2 and the 4 give us an indication of where we might hit resistance on the 5. Into this structure, I'm just going to do the same thing. I'm going to grab my fib tool, and I'm going to go. I'm going to go from the 1 here to the. I'm sorry. Do it again. It is the 2. I'm going to go from my 2 to my 4. Or to my 3 high. There's the 4 at the 382, and you can see it here. If I squiggle it, you see the gold line up there. That's the negative 1618, which we know is an absolute extreme. If we're pulling from a swing to a pivot on the retracement, that is a true extreme. It's rare for them to go beyond the negative 100. We've gone to and through by a tick or two on the negative 618. So thus this box up here, which gives us this little resistance that we're hitting. So we've got a real confluence of fib relationships off of these major swings. We know algos are written to either buy or sell at these levels, and so it shouldn't be a surprise that we're stalling here, right? We're also trying to get to the round numbers here of 6,000. We've got some swing targets up here, right at 6, and then of course if this holds as our low here, we've got the negative 23 here. So really, there's nothing out of the ordinary in terms of what we're seeing here with Bitcoin. This is pretty much by the book. Now, what's making it difficult is to find an entry. If you're not already long and you're looking to get in, well, the simple entry has already come and gone, which was the 38.2, which we had, I think it was Friday. So if you're not in that, now you're looking for the deeper retracement if we get it. So let's go over to the 1 hour and see if we can make sense of it. So because of this of the market stalling here, we've gone into a pretty substantial complex correction. Now I'm here on the 15-minute. Where it's getting tough to read it, but there's certainly there are clues here that we can look at to give us some sense of what we might expect next and where we might look for opportunities to get into the market. So we had I know there's a lot on here, so let me pull some of this off so you can kind of see how I'm getting there. So I'm going to pull this swing off as well. Okay, so let's try and break this down. So this is what we had on Friday night, and there's a little bit of a lesson here that I can show you on a trade that I caught, but I then promptly gave it back. So, listen, this is very tough trading up here, but there's a lesson here I can show you that I think would be worthwhile. So here's what was happening Friday night, and I think I posted this up on TradingView and did a video on some possible alternate counts. So without knowing what's to come, we had this forming up on Friday night. So at one point, we had the possibility that our third wave was here, and we were looking for a fourth here, and that possibly the 5 was here. It was in because we had this little 5-wave diagonal structure. But the problem with that was the overlap here at the 4. So that was, I think I mentioned on Friday's video that this was it's something you had to pay attention to, because this is a clue. As in a true impulse, you would not get that overlap. So this pivot here, and this is our high, was somewhat suspect. We also didn't get a clear 3-wave breakdown in here. If this was going to be an ending diagonal, you'd expect a 3-wave structure here, or a little bit of an ABC. We did have the nice ending diagonal here to complete what potentially could have been the 5. So there was the possibility that we had some sort of a swing in, and we had the possibility for a low to high looking for the 50%. Possible, right? So this was a scenario that made sense. But then we get this action here, which was the clue, and this is sort of the lesson I'm trying to show you. So had this kept going, then we could have confirmed that as a leading diagonal that was setting up for potentially a 1 wave to bring us down to our high probability entry zone, which would have been between the 50 and the 618, which would have teed up perfectly with the Vegas wave. So it was all there. It was all there. But what happens? So I'm going to take that off so we can get a closer look at this. So this became a point of concern because the structure didn't quite make sense. So the clue came when we came back down here and stalled. And we stalled where we had been expecting the stall here. So the wave 1 holds this by a tick. Now that is a strong signal to you that potentially what we have here is one more leg going up, and that we are indeed going to stay impulsive. So all I did was switch this over as potentially the 4 wave, and basing that off of the fact that the structure works better. So this is happening Friday night. I was able to watch the market that night because my wife was late getting home. So I was kind of watching this, and I saw this and said, okay, well now this starts to make much better sense, because here's our 1. We get a little ABC for the 2. Here's our, assuming we have a diagonal, we get better structure here for a 3 high. This comes down for the 4. The wave 1 holds it, so there's a trade here. So given that we're in some sort of a diagonal, you always want to check from the all the way halfway back, or from the swing low, which was here, what we had labeled as the 4. There now is the 3 high, and you can see now it lines up exactly with the 50. The wave 1 holds. So this was a nice little trade, and I not a monster. This is a nice little single, but took this. I think my entry was right around 56.75, and took it, and I got out at the negative 23. Now, before you think I'm some sort of a trading rock star, I immediately then, what you would expect given that circumstance, if that was the top, then I drew this. So this was potentially a completed 1 wave. So I went to my absolute low, drew it to the high, put an entry here, again looking for entry at the Vegas wave and looking for likely support at the 1. Went out to dinner with my wife. By the time I came back, I was in and out, right? So essentially, made about 126 here and lost 75, so I consider that essentially pretty much of a scratch. But the reason I make the point of showing that is not to show you my trade, but is to show you partly my trade, my immediate loser, right? So I don't want you to think this is easy or that everything that I'm posting up is just winning trades. That's not the case. I'm really more trying to teach you, and the lesson here is this was the clue. Right? When this held at the 50, there was reasonable probability, good probability with very low risk, because you could take this trade here with an incredibly tight stop, knowing that if we break the one high and we break the 50, then something else is going on, and I've got the count wrong. So that was a nice little trade, and of course it broke down into a nice little 5-wave sequence. So this all makes sense now coming back the other direction. Now here's where it gets difficult. So this tops, right, and it's a bit of a double top. I mean, without being right to the tick, it's we're pretty darn close to a double top, which is somewhat surprising. So your expectation would be that we're now setting up for this is some sort of a one wave, right, to complete. We're now here's 3, 4. We're going up to complete a 5. And we get surprised by this because what follows now is a very clear 5-wave structure, which is not what we were expecting. What we were looking for, if this was going to be the one of a move into a 5th wave, we were expecting a 3-wave structure. So this trade made sense if you took this as I did and got stopped out. Don't feel badly. It was a relatively small loser, but it was the right trade to take based on that structure. Now, as to putting an order in and leaving it when you're not there to watch it, that's up to the individual and your confidence that your stops are going to be hit. But that there's a time and a place for that as long as the size is relatively small. I don't love to do that, but I will do it, if something's setting up that nicely. So let's look at it now and see, well, what kind of sense can we make of it here? Well, clearly this is not a 1. So we don't know exactly where we're going just yet, other than the fact the one thing that we can see with crystal clear precision is that we have a 5-wave sequence, which is, we know the market is, certainly we're in a long-standing bullish trend. So this would imply we're putting in some sort of a correction. This is our first move down of some sort of an ABC, whether or not it ends up being a triangle or goes complex or we get an XY. All we know is that this is a very, very large clue that we go into a clean 5-wave. So what's the expectation? After the clean 5, we're expecting a 3-wave into a B. So the simple answer would have been a move down here for the C. A, B, C down to the 50. That would have been the easy buy. Well, the market, Bitcoin has not been easy to trade, particularly on these smaller time frames. Now, another lesson or point to take note of, whenever you're down to these shorter time frames, anything less than an hour, you have to be prepared to constantly be moving your count based on what the market's giving you, because when you're at these time frames, you're dealing more with the noise of the market, if you will. These little short-term, these are very algo-driven moves where you're trying to fight against a computer, and this is what makes trading at a smaller time frame, whether it's in crypto or forex or in futures. The shorter the time frame, the more difficult it is to trade it. So you have to be prepared to create a roadmap. What's the best evidence given to you, and then be prepared to very regularly be relabeling as the market unfolds, because you're dealing with all of the noise in these little micro swings. Now, just to make the point in case, if I go from the 15 back to my 8-hour, well, what have I seen here? If I blow this up, the only thing I've seen is that I've had some sort of a swing high here at a confluence zone where I was expecting resistance, and from this wave 2, which we have pulled from over here. If I bring this up and I'll show you where I'm pulling that. Let me get this up. So all I've done is take this swing low here, currently labeled as our 2 wave, and I'm taking that number and I'm putting it on our 8-hour, and here it sits. So here's our two low from our 15-minute. Well, swing high, we get some sort of an A, B, C. We've gone right to the 38, which is why I drew this box. If that's a 4, what's the most common location for a 4 wave? Between the 38 and the 50, which is why I draw this box here. We come in, we wick it nicely. Now, all that complexity, you're not seeing that on an 8-hour. You're not going to see it on a 4-hour. But, if you want to get down into fine-tuning, which we've been trying to do, looking for, a reasonably safe entry with good risk-reward parameters, you've got to take it down to a smaller time frame. And the 15 is where you can see it. But you get a lot of chop here, and that's what we're seeing. So we're kind of stuck between this resistance zone and the logical place to find support, assuming we've got a good wave 2 in here, which is right in this box, which is right where we came. So it just becomes a question of whether you want to go into that very minute detail and be dealing with this complexity. If that's not something you either have the knowledge base to do or you're comfortable with, keep it simple. Right? Stay on a 4 hour. I will tell you the majority of the trading that I do is based off of a 1 hour, a 4 hour, and a daily. So, here, simple. All you did was be a buyer at the 38. You've got some nice profit. If you're trying to, get into the minutia of it and trade these little microwaves, part of this is, you have to like doing this. You have to have the knowledge base to recognize what may be going on. So as you look at this now, again, it's being difficult to trade. So we've got an A. Here was a B. We don't get the easy C. We don't get it. We get another leg up and actually breaks the high. So potentially this is going into some sort of a triangle. Maybe. The one thing that's clear is the A. This is... We could be relabeling this because we've got potentially some sort of a diagonal structure here, right? We overlap. If this were to go into a 5, because this, again, we don't know what this is going to be. This is the best thing I can come up with. Now, additionally, what I can do is do this. I can pull from my swing high to my swing low, and see we've broken the 6.5, but we stayed in between under the 7.86. So I've got an internal retracement here that's going complex. I mean, look at the complexity here. This is just a question of you want to get into that minutia and try and trade that. That requires more Elliott wave knowledge, and it requires more trading discipline because you've got to be really precise about the entry, and the stops are likely to get hit the majority of the time. You got to be okay with that. So where we go here, it's hard to say. If we start pushing past the 786, then we've got to reconsider this whole thing. Right now, the strongest clue is this 5-wave sequence here, implying that the current short-term trend is down until proven otherwise. So here I'm 18 minutes on Bitcoin. Damn it, I do this all the time. Okay, so let's pause there. I guess the bottom line is, if you're looking for an entry, I would not be trying to buy it in this little mess here. I would be waiting for a deeper retracement. Here's the target we're hoping for. So if we look from swing high to swing low and we just work off the fibs, we know that a correction like this can go easily up to the 786 as there's a push to get new highs. If that fails, then the stops start getting hit. The people that are comfortable pushing to the short side will try and take it down here to the negative 23. We know that's an algo target. So potentially you've got your next entry here down in this zone, be 5370 to 5320 in that little window would be the ideal scenario. Now, in addition, we'd want to pull a channel off of this and see if that makes sense. So structurally, that plays pretty well. But we've also got we got to look at this. So indecision, stuck between two fibs. Where we go next, I'm hoping for the pull down here for a re-entry on the long side, right? We're all looking for longs in Bitcoin. So if we come down to here, I pull the trigger there for me, right? So one to watch. All right, let's get off Bitcoin because we can spend a lot of time there. Let's go to Ethereum because this is setting up nicely. So we looked at this also on Saturday. We've got so here interestingly, This looks a lot like what we're seeing in Bitcoin. We get with the A wave, we get a 3-wave B. We think the C should go to a new low. We don't get it. We get this extension, goes into resistance, back down. So, I mean, 3 to 5 Elliotticians might look at that and each one give you a different count. Doesn't really matter. Well, I've got some sort of corrective structure here, and I go into a double bottom. And the channel support, seems to be giving us some sort of structural clue. And now we've gone impulsive. Okay, so that's what I can see clearly, right? As to what this ends up being doesn't really matter to us. What I can see now is that I've had an impulse move here. So if this is my 1, this is my 2, all I'm doing now, again, I'll just redo it. All I'm doing is pulling fibs, right? When in doubt, keep it simple. Here's my swing low here before I launch up to my high, and we've gone just a few past the 50, but look right to the Vegas wave, right? That's always one to pay attention to. Well, what are we expecting? So if this is, let me blow it up a little bit. If this is a 4 wave and we're going to go up into a 5th to complete this impulsive structure, well, I'm looking for a 1 wave. Well, so far we're off to a pretty good start. Now it's a little messy. Now here's where it comes down to, are you comfortable going to the smaller time frames to really break this down? Well, this is where it can be helpful. Now take note here. I'm gonna pull this off. Right, can I get a 5 wave here to show me that I've got a good 1 wave? Is this likely a 1 wave? Well, you can see it pretty clearly. Here's the 1, 2, here's my 3, here's my 4, and I complete with a 5. Let me put that in a different color. Okay, do you see that? So potentially, I'll pull that off. That wave 1 is in. Now, take note, we're looking for clues. Here's my wave 1 high. That does not happen by accident, right? Let's look at the retracement. So you're kind of building a case to say, well, does that work? Does that make sense? That's a 4th wave? Well, here's our impulsive structure. We get a little ABC into this. The wave 1 high holds. We go right to the Vegas wave. We're a few ticks beyond the 50. Likely target here, 50 to the 618. And then we rock up for one more time. Now, again, it's about looking for relationships. We look for the wave 1 from the wave 4 low, and we go right to the most likely target, which is 100% of the wave 1. Whoops. Do you see that? This little maroon line here, that's 100% of the wave 1 projected from the wave 4 low, looking for the relationship between 1 and 5. Most common, 100%. We go to it damn near to the tick. We go through by a couple of cents. Okay, so that tells us that we have a good probability here for a completed 1 wave. So as we put that back into the larger time frame, we go back to a 1 hour. We've got a completed structure, and we're now dealing with the correction of that. So here I go back to my 5 wave. We know we're looking for the 1. Now we're looking for the 2, 3, 4, 5. I'm going to put the wave on it so you can just kind of see how it's waves within waves. So we've got our 4 in. We're now looking for an A, B, C. And we know the high probability targets for a 2nd wave are between, I'm going to take that off since we've got that marked out, are between the 50 and the 618, although we'd want to put our, if we're going to take this trade, which is, it's basically setting up as I record this, between the 50 and the 618, stop on the other side of the 65, right? To keep the stop small. We do know that a wave 2 can go as deep as the 786. So that's, this is kind of trader's choice as to whether or not you're comfortable giving it that much room. My view is keep it tight. If your assumption is that this is going to be a wave 2, you're looking for the 618. That's the most likely target. You can be very tight with a stop there, knowing that if you're stopped out for, these are less than $5 stops. If you're stopped out there and it's going to go a little bit further down, it's, no problem to re-entry. So, this is where oscillators can help you with timing. We could go deeper here. We could go a little bit deeper. You can't quite tell. So again, you might take it down for the micro tuning of your entry. You might go down to the 15-minute and say, well, can I get a good ABC here? And where does that complete? Where does that make sense? I'm going to take this off a little bit. Okay, so here's my A. Here's my three-wave B. What am I looking for? I'm looking for a swing relationship between my A and my C. Most common would be 100%. Now that's a little bit lower, right? So there it is. There's the 100% here in maroon, just as we looked at the 100% from the 5 high compared to the length of 1 compared to the length of 5 hit 100%. In an ABC, it's the same thing going the other direction. So now we're looking for potentially we've got a bigger box here. So entry zone here, here's the 618. Here's the 786. Here's the 100%. Even deeper potential target could be the 1272. That's not uncommon in a C wave. So again, it's just a matter of where are you comfortable. Now take note here, we're sitting at the 50. We're right in the pocket of the Vegas wave. If we go down and look at our oscillators here now on the 1 hour, we're getting a little deeper down. So we're creating the energy potential for this to go from low to high. So there's a trade there. It's just a question of what your risk tolerance is. So you might wait to see, signs of this starting to turn. Now keep in mind, we're on the 15-minute. The other choice is, you draw a channel on it. Steep channel. Looking for structure, that could take it all the way down here. So, this just becomes a matter of, what's your risk tolerance? What's consistent with your trading plan? How aggressive do you want to be? How bullish are you on Ethereum long term? And recognize that we're sitting and looking at a 15-minute chart. So, that's about fine tuning an entry. Now here we've broken the 50. We're coming up here. Here's the swing high of the 1. Not that that's relevant to this count, but that's structural. Previous resistance potentially becomes support. Right here now look at the RSI is taking a deep dive down to 20. So there is a trade setting up there, one to watch. I'm a long-term bull, so I look for entries. I'm long, so this is a place to add additionally here. But remember, I'm on a 15-minute chart. If we go back to the 4 hour, here it is on Poloniex on the US dollar tether. You're not seeing that complexity. You're not seeing that. Now, this is worth looking at here because take note of where we drew this box, right? And the reason we drew this box is because right here, despite the fact that I'm showing you an impulsive structure, we remain within this swing high to low. So this continues to be an internal retracement, internal to this entire move here. All we've done is gone and wicked the 786, which is why we drew this box, right? So we had the combination of the 786, and do you see the maroon line there? All I've done there is, I'm going to recreate it so you can see it. All I've done is take my alternate price projection tool. I'm going from my low to my A wave high to my, look at the maroon line, comes down to the B low. That's why we drew the box. So we've got the 786 and the 100% alternate price projection lined up to the tick, and where do we go? Right, so and then the channel is just giving it structure because the channel is based on the swing lows, right? So we go low, here's our last high, and we're wicking the outside edge of that. So I think actually what I did was I extended it. This is a little trick here. If you want to go left because it cuts it off. So if you were looking for the exact high of the A wave, once I've got that dialed in, I don't really want all this on the chart. So I'll highlight that again, and then I'll take off the extension. So I know that pivot here, that this line is actually tied to this pivot. So I've got pivot, 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 and look how we tick that perfectly. So, you got to pay. It's a combination, right? You're always looking for price, pattern, structure. And there's a degree of time as well, because as soon as you put a channel on that, you're now adding a time element in terms of how and when it gets there. Right? So if we retrace here, we're adding another time element. If we're going to head up to this high, that's going to take a certain amount of time because it can't go straight there along the edge. Well, I suppose it could, but that would be extremely unusual price activity. So pattern, price, time, structure, these are all the clues that we try to apply to the chart to say what's likely to happen here. And if we're right about what we think is going to happen, What's likely to happen next? Now here, the one thing we know for sure is we've hit the resistance we were expecting, exactly where we were expecting it. Now, does that mean the top's in? Well, it's possible. If you look at this, you could make the case that there's a 1, 2, 3 down for the 4. We've come up for the 5. That could be the top. It's possible. It's possible. Let's go back down to the smaller time frame. Does that make sense here? Well, it's you got to blow it up here. I'm going to go back to the hourly, and this is how you got to approach this. Well, if it's possible. This could be the 1, 2, 3, 4. We've completed the 5. That's possible. That's possible. But if that's the case, then keep in mind that means we're letting go of the possibility that this move here, as I'm going to highlight that. Let me see if I can bring it down here. So right now we're trading on the assumption that there's another 5-wave sequence to come based on this 1, 2, 3, 4, right to the Vegas wave. Here's the 5th. Now, if the top is in, then that's what we've got, is a double top at likely resistance. So for bulls, we're looking for a move up here because we're looking for a relationship between this 1 wave, this 3rd wave, and this 4th. Now, certainly it's possible that we're going to get a double top 5th here. It's possible. But if you're bullish and you're looking for entry, you're trading and playing off of this roadmap. Okay? Let me go back to the 15. You're playing for the upside target off of this structure. So does it make sense? Is it possible? Well, now, interestingly, look what's just happened here. So we're starting to get signs of support here. Right now, take note here, this wave 1 high, we don't overlap. So it's possible this gets relabeled. It's possible that this gets relabeled, that this becomes the 3, right? Because that's a clue. If that doesn't overlap, it gives us the idea that possibly this is not a 3, 4, 5, that this is just the 3rd wave. Here's the 4th wave, and we go again. So if you're a bull, that's why you draw these boxes and look for entry. Look for entry down to the 15-minute. RSI potentially starts moving higher, and you get some confidence in it. Now, you want to be more conservative. I know I'm running long here, damn it. You want to be conservative. You go from here, wait for this, then wait for this. Then take the 50 off of that. Because if this is going to go, we expect it to move impulsively. So if this is the roadmap that plays, we're looking for now a 1, 2. Remember, it's waves within waves within waves. It's the fractal nature of Elliott wave trading and the way the market moves. So if we've got a completed A wave, 3-wave structure for a B makes sense. Here's our C wave. Potentially our 2 is in. Good structure. If you want to be more conservative, you wait for the push. Let it break the channel. Let it break the channel. Wait for the next retracement. That's the more conservative way to trade it because now where's your stop? Your stop is on the swing low because you're operating on the assumption that your 2 is in. So if that's taken out, well, then your count is wrong. And you take the smaller hit here rather than waiting for this to move. It could go that high. Now where's your stop? Now is your stop here, or are you just going to put an arbitrary dollar amount on it? I continually tell you, you trade the market, not your pocketbook, right? So here it's a random number if you can put the stop down here or here or here. Where does the count become where does it get violated? So you can't count it that way anymore. Well, that's the break here. So if you wait for this, you wait for the first retracement. You take that with a stop here. Much lower risk, but we know we've got huge upside targets, so the risk reward stays very favorable to you. All right, how am I doing? God darn it, there's 33. Let's quick trip over to Litecoin. All right, there's good things to learn here as well. Okay, so here we're operating under the assumption that we've got a 1 wave in. Now take note of this, guys. Look what we've run into. So again, I keep reminding you, as much as we want to be bullish, we are still within an internal retracement from swing high to low. Let me tighten that up since I've just changed time frames. Get that right on the high. Okay, here's our swing, dominant swing, high to low. We have just now wicked the 618 of that move. So should not be a surprise that we hit resistance there. Now, that's why we draw the box. That's why the box is there. So I've got the box between the 618 and the 65. We hit the 618 to the tick. Now, additionally, I have the negative 618 here, which I've drawn off of this swing low here to this swing high. We do double top, but this is the furthest one out in time. So this swing here comes down. We don't quite get to the 50. We go to and through the 38, which was the 50 of this swing. And now we hit the negative 618, the 618, and the 65 window, which is why that box is there. So the assumption now is, well, if we're starting a new impulse, right, then we've got much higher prices ahead. So how are we going to get there? If we're going impulsive now and we're going into a new impulsive structure, well, we need a one wave. So, let me go back down to the hourly. So how do we get there? Well, we need a one wave, and we need to see that one wave into some sort of a 5-wave structure. Well, here's our one wave. Here's our 2 into a 3, deep 4. Granted, deep 4, but note right to the Vegas wave, to the tick. And then from there, we start another 5-wave sequence. Here's our 1, 2, 3, 4. You can even see a nice little breakdown into 5. We go right to the little box in the 618. Now we start the correction. Now here's our A wave. B wave. Well, we always want to track the trend, the fibs going the opposite direction. So we swing from high to our A low. We go just shy of the 618, the very common target for a B wave. Now, where's our next entry? Well, we're looking for it down here, which would be the negative 23.6 off of this retracement here. We're looking for that, and then we're looking for the 50%. If this one wave is complete, well, now we're looking for the 50 to the 618 of this entire move here for the next entry long. Good spot here because I've got my fib target, I've got my Vegas wave, and I've got the 50%, and I've got previous, congestion here. So there was indecision. So there's likely to be support here structurally. Now we can put a channel on this. I know it's steep here. Does that make sense? It's deep, right? So this, if you're entering here, we'll split the difference. So that's, call it 59. If you want to go down to below the 65, you got to go to 55, right? So again, it's all relative to size and your risk tolerance and what you're comfortable with. Would you rather, if you're a buyer here, want to put the stop, under the 6.5? Well, it could go as deep as that's what I would suggest. All right, so if you're a buyer at the 50, stop under the 6.5. If you do get stopped out and it's going to keep going lower, we know we got the 786 here, and we've got the negative 100. So next buy zone, if it's going to go that deep, would be down here. Do you see it? It's always just a matter of creating a potential roadmap and then watching to see if the market follows it. Because if the market follows it and you hit an expectation here, well, then you know what to expect next. Doesn't mean it will happen, but you've got a potential roadmap that gives you an advantage in the market. So right now, these markets, with the exception of Bitcoin, which is stuck in this very complex correction, which shouldn't be a surprise, Ethereum and Litecoin, a little bit more structurally available to us in terms of places to look for entries. Right? Ethereum, it might be there right now. Litecoin, you're still waiting. This would be the ideal spot for it. All right, I've gone long here. That's 38 minutes. I got to wrap now. I'll be back with a second video today on Dash, Monero, and Ripple. Okay, that's it for now.